iWIN TV. See what others can't.
Welcome to the November 25th, 2017 edition of the weekly investment news show, iWIN TV, where you win, because we use algorithms, not people, to select stocks and manage risks in the markets. We're the robots you can trust.
Why watch the talking heads on TV, who might have a hidden agenda, when algorithms have been shown to make better decisions?
Right now are
25% and gold is up 50%. It wouldn't be a total shock.
Get those old voices out of your head and start watching iWIN TV to get better results from your investments.
Today we're going to cover stock selection followed by risk in the equity markets and interest rate risk. Past performance is not an indication of future performance. Please pause this video and read the disclaimer.
As you can see, there are currently 50 stocks in the portfolio with 84% winners and 16% losers. The average winning return is 41%, with the best stock Nvidia returning 667% since it came into the portfolio 2 years ago. The average loss is 5%, with the worst stock, gaming company Electronic Arts, losing 10% since it was purchased about 3 months ago. This week the natural selection algorithms bought and sold 5 stocks. They bought the healthcare insurer Aetna, the apparel store company Abercrombie & Fitch, the farm and construction machinery company Caterpillar, the oil and gas refining and marketing company Holy Frontier Corporation, and the home furnishings company Tempur Sealy International. The 5 companies sold were the Chinese internet information provider Baidu, which was an underperformer in the portfolio with an 8% loss; the railroad company CSX, which was up 14% since it was purchased almost a year ago; the diversified computer systems company Hewlett-Packard; the communication equipment company Nokia, which was down 24% since it was purchased about 3 months ago; and the jewelry store company Tiffany, which was up about 3% since it came into the portfolio about 6 months ago. So now for a read of the equity markets. The risk in the equity markets remained unchanged this week. The risk level of the Dow Jones Industrial Average was at very low risk, while the S&P 500 was at low risk. The risk level of both the Nasdaq 100 and Russell 2000 remained flat at moderate risk.
And now let's talk about the current interest rate environment. Our measurement of interest rate risk improved to low risk this week. Interest rates seem to be moving in a small range with no firm direction. Your government treasury investments should be fine for now, but we are keeping average durations somewhat shorter at 7 to 10 years in case interest rates begin to increase. Until next week, we'll be watching the markets for you to bring you the latest opportunities and risks. Please subscribe to get better results from your investments. Thank you for watching.
iWIN TV. See what others can't.